Are you making a huge mistake with your money? For years, people have argued, what's the better way to build wealth? Is it buying property you can see and touch, or investing in the stock market? So many people get this wrong, and it costs them their financial future. The truth is, there isn't one simple answer, but by the end of this video, you will know exactly which path is right for you. 2. This decision could be the difference between retiring comfortably and struggling for the rest of your life. So, pay close attention. Let's start with real estate. It's the classic dream, right? Owning a home, or even better, a property that pays you every single month. The biggest pro here is passive income. Imagine getting a check every month from your tenants. That's money flowing into your bank account while you sleep. Another huge plus is that it's a tangible asset. Jet. You can literally drive by, look at your building, and say, I own that. It feels real, because it is. Plus, there's a powerful tool called leverage. You can borrow money from a bank to buy a much more expensive property than you could afford with your own cash. Think about it. You might only put down 20%, but you get 100% of the appreciation. The government also loves real estate investors, offering tax benefits like deductions for mortgage interest, property taxes, and even depreciation. During times of high inflation, like what we've seen recently, rents and property values often go up, protecting your investment's value. But before you rush to call a real estate agent, let's talk about the dark side. The biggest hurdle. The massive upfront cost. You need a significant down payment, closing costs, and a cash reserve for emergencies. We're talking tens of thousands of dollars, if not more. It's not something most people can just jump into. And once you own it, the expenses don't stop. The roof will leak. The water heater will break. These maintenance and repair costs can pop up at any time and wipe out your profits for months. On top of that, you have to pay property taxes every single year, whether you have a tenant or not. And that brings us to the biggest fear for any landlord: vacancy. What if you can't find a tenant for 3, 4, or even 6 months? You're still on the hook for the mortgage, taxes, and insurance. All that money is flying out of your pocket with nothing coming in. Finally, real estate is not liquid. If you suddenly need cash, you can't just sell a bedroom. Selling a property can take months, and there's no guarantee you'll get the price you want when you need it. So, what about the stock market? This is where fortunes can be made with just a few clicks. One of the biggest advantages is the low cost to start. You don't need a massive down payment. You can literally start investing with just a few dollars. That makes it accessible to almost everyone. Stocks are also highly liquid. If you need your money back tomorrow for an emergency, you can sell your shares and have the cash in your bank account within a few days. The historical returns are also very compelling. Over the long run, the stock market has provided average annual returns of around 7 to 10%. That's powerful compound growth working for you. Thorsa, a hands-off way to invest. You can buy into a broad market index fund, like an S&P 500 ETF, and you don't have to worry about tenants, toilets, or termites. Your investment grows passively over time. Plus, diversification is incredibly easy. With one single fund, you can own small pieces of hundreds, or even thousands, of different companies, spreading your risk instantly. But hold on, the stock market isn't a magical money tree. Its greatest weakness is volatility. The market goes up, but it also goes down, and sometimes it goes down hard and fast. Seeing your life savings drop by 20 or 30% in a matter of weeks can be terrifying. This leads to the biggest risk for most investors: emotional stress. Fear and panic cause people to sell at the bottom, locking in their losses right before the market recovers. It takes nerves of steel and real patience to ride out these dips. Remember 2008? Or the flash crash in 2020. Many people lost everything because they couldn't handle the pressure. You have to be willing to invest for the long term. We're talking years, even decades, and ignore the daily noise. Unlike real estate, you also don't own a physical asset. You own a piece of paper, or more accurately, a digital entry. You can't see it or touch it, which for some people feels less secure. So, after all that, which one is actually better for you? It really depends on who you are and what you want from your investments. There's no one-size-fits-all answer. You should seriously consider real estate if you want consistent cash flow. If the idea of getting a monthly rent check that covers your mortgage and leaves you with extra cash sounds amazing, property might be your game. It's also for people who don't mind being hands-on. Or you, okay with dealing with property managers or handling a late-night call about a broken pipe? If so, the responsibilities won't scare you off. And if you want to use the bank's money to grow your wealth through leverage and take advantage of significant tax benefits, real estate is one of the best vehicles to do that. On the other hand, you should probably stick with the stock market if your main goal is simple, hands-off growth over the long term. If you have a busy career and family, and do you want a second job as a landlord, stocks are perfect. Just set up automatic investments and let it grow. Stocks are also for you if you prefer low maintenance and want to avoid the headaches of repairs and tenants. And if you want to be diversified across the entire economy with just a small amount of money, you can't beat the simplicity of an index fund. It's the ultimate set-it-and-forget-it strategy. Let's look at a real-world example to make this crystal clear. Imagine you buy a rental property. After all, your expenses, mortgage, taxes, insurance, and repairs, you might earn a cash flow of 4% per year. Then, let's say the property value goes up by another 4% that year. Your total return is 8%. That's a solid return. Plus, you had the benefit of leverage. Now, let's look at stocks. A well-diversified stock portfolio, like one that tracks the S&P 500, has historically returned an average of about 10% per year over the long term. The returns are close, but they get there in very different ways. The property gives you income along the way, while the stock portfolio's value grows more quietly in the background. So, what's the secret? The wealthiest people in the world don't just choose one. They use both. They build cash flow with real estate to cover their living expenses, and they build long-term, generational wealth in the stock market. Real estate can make you rich, but the stock market can make you wealthy. The key is to understand your own financial goals, your tolerance for risk, and how much time and effort you're willing to put in. Don't let anyone tell you there's only one right way. The best strategy is the one that fits your life and helps you sleep at night. What do you think? Are you team real estate or team stocks? Let me know your thoughts in the comments below. Your journey to financial freedom starts with making the right choice for you. Thanks for watching, and don't forget to subscribe for more tips to help you build a wealthier life. See you in the next one.